America's debt just crossed $39.8 trillion. That's close enough to 40 trillion that it barely matters which one you say. And here's the strange part. Almost nobody is talking about it. No emergency headlines. No crisis meetings. Just another Tuesday. So why does something this big get almost no attention? Let's break it down, one piece at a time. What is a treasury bond? In the simplest possible terms, a treasury bond is just an IOU from the government. The US needs cash. So it goes to investors, banks, and other countries and says, lend us money. In exchange, the government promises to pay it back later, with interest. That's the entire concept. Governments have done this for centuries. The only thing that's changed is the size of the number and how many people still want to lend it. Why does the US keep adding more debt every single year? 4 reasons. First, the deficit. The government spends more than it collects in taxes almost every year. Second, defense spending. Third, social programs like Social Security and Medicare, the largest chunk of the federal budget. Fourth, and this is the new one, interest itself. The US now pays over $1 trillion a year just in interest on debt it already owes. That's more than the entire US defense budget. Here's why that specific fact matters more than it sounds like. The government now has to borrow new money, partly just to pay interest on money it already borrowed. That's not a metaphor. It's a loop that feeds itself, and it's the reason this story isn't just debt is big. Its debt is now generating more debt, automatically. For decades, none of this actually mattered because there were always buyers. China bought US debt. Japan bought US debt. The Federal Reserve bought US debt. Everyone wanted it because a treasury bond was considered the single safest asset on Earth. That's the assumption this entire system depends on. And it's the assumption that's now starting to wobble. Start with China. China used to hold over $1.3 trillion in US debt. Today, that number has dropped to roughly $730 billion, the lowest level since 2009. Why does China's selling matter, specifically? Because China wasn't just any buyer. It was one of the 2 largest foreign buyers in the world for decades. When a buyer that size steps back, someone else has to step in to replace that demand, or the price the US pays to borrow goes up. China's reasons for selling come down to 2 things. Tension with the US makes holding US debt feel less secure, and China has been buying gold instead, because gold can't be frozen or sanctioned the way a treasury bond technically could be. Now Japan, and this is the one that actually matters most right now. Japan is the other of the 2 largest foreign holders of US debt. For years, Japanese investors borrowed cheap yen at near-zero interest rates, then used that money to buy higher-yielding US Treasuries. That's called the carry trade. Here's why it worked. As long as Japan's own rates stayed near zero, US Treasuries paid so much more that the trade was basically free money. But Japan's central bank has spent the past 2 years slowly raising its own rates. And that changes the math directly. As Japanese rates climb, Japanese bonds start paying more too. Which means Japanese money no longer needs to cross an ocean to find a good return. It can just stay home. This already happened once, briefly, in August 2024. A smaller-than-expected shift in Japanese policy triggered a rapid global sell-off, as investors rushed to unwind these yen-funded trades all at once. If Japan keeps raising rates, more of that money that used to flow into US Treasuries could simply stop coming. Put China and Japan together, and here's the actual mechanism you need to understand. When fewer buyers want US debt, the government has to offer a higher interest rate to attract whoever's left. A higher interest rate means the government pays more just to keep borrowing the same amount. Paying more interest makes the deficit bigger. A bigger deficit means the government has to borrow even more next year. Borrowing more, with fewer buyers already in the room, pushes the interest rate up again. That's the loop. Each step causes the next one, and there's no obvious point where it naturally stops on its own. So if China and Japan are pulling back, who's actually left to buy all this debt? 3 options, and each one has a real limit. The Federal Reserve could buy more, and it already holds about $4.5 trillion in treasuries. But if the Fed keeps expanding that just to cover the gap, it starts to look less like independent monetary policy and more like the central bank directly funding government spending. That undermines the entire reason people trust the Fed in the first place. American pension funds and retirement accounts could buy more, since many are required to hold safe assets like treasuries. But every dollar that goes into a treasury bond is a dollar that isn't going into a stock, a corporate bond, or a business loan. At some point, that starts to quietly squeeze the rest of the economy. Whatever's left is foreign demand, spread thin across the UK, and a handful of smaller buyers who can't fully replace what China and Japan used to provide. None of these 3 options is a real long-term fix. They're just ways of delaying the moment when the math has to balance. To be fair, there's a real counter-argument worth taking seriously here. People have predicted a US debt crisis for decades, and it hasn't happened. The dollar is still the world's reserve currency, and there's no clear replacement waiting to take that role. Japan itself carries a debt-to-GDP ratio more than double America's, and Japan hasn't collapsed either. A country that borrows in its own currency and controls its own central bank genuinely has more room to maneuver than a household ever would. That's a fair point, and it's exactly why this story doesn't move markets the way a stock crash does. But more room to maneuver isn't the same as no consequences at all. Even without a single dramatic crisis, the pressure from this loop still has to land somewhere. So where does it actually land? Treasury yields rise, because fewer buyers means the government pays more to borrow. Mortgage rates are tied directly to those yields, so they rise too. A single percentage point on a typical mortgage adds hundreds of dollars to a monthly payment on the exact same house. Corporate borrowing costs rise the same way, because businesses borrow off the same benchmark. More expensive borrowing squeezes company profits, and that pressure eventually shows up in the stock market. A weaker stock market and pricier borrowing together slow the broader economy down. A slower economy collects less tax revenue, which makes the deficit bigger again, which is exactly where this loop started. None of this needs one dramatic headline day. It shows up quietly. A slightly higher mortgage quote here, a slightly weaker earnings report there. America isn't going to default overnight. That's not how this actually works, and it's not the real risk. The real risk is slower and much less dramatic than a single crisis moment. America may not go bankrupt, but all of us may end up paying the price of that debt anyway.